Good morning, everyone. It's Chris from Solstice as well as Axel. You can find us on both websites, X as well as YouTube. Remember, smash the like button on YouTube, subscribe, let us know what you think. And if you want to become a better trader, you can check our website by taking a look at the boost where alpha is. So you don't want to trade alone. To be a better trader, you have to understand the market volatility for the side market, up market, as well as down market. And when you get opportunity to be entering a position, whether you swing trade or day trade, it'll be more important to you to learn technicals, because the micros will give you the overall view of the market. The fundamentals are always fundamentals. This is what most people go by. But if you become a better trader, you need to learn technicals in order to help you by using adaptive algorithm or regular technical setup according to your objective. Second, you can find us on X, and I wanted to give this idea. I gave this last week on May 10th, and I said, hey, pay attention to Tesla and ONDS. So if you took the last week's video, because all these videos are linked from one week to the next, what I think of the coming week, what the market's going to do. And this is something you should look at. And I can show you ONDS right here, where I said to everybody, hey, let's take some money off the table. We are done here. This is on May 15th. Good morning. The overnight inventory is red, expecting the breadth of the New York Stock Exchange on the S&P, NASDAQ, Russell, and Bitcoin has been weak for the last 7 days. Been warning a lot of people to stay away. And I said, hey, these are the technicals that you have to MU, AMD, Dell, XLK, which is the tech, semiconductor, SMA, NVDA, and Apple, versus the dollar, the VIX move, TNX, which is the interest rate, TBT, crude oil. And I said, happy Monday. And you can see here what I posted. And I said ONDS here, pay attention to ONDS in the morning. And this is the time span. If I open it up, I'm going to show you the time stamp. That was 6:30 in the morning. This is the time stamp when I said to everybody, off the gates, take some profits. And here's the chart on ONDS hitting $12 some change. And this is the time stamp on 5:15 in the morning on the 5-minute bar. So we were at the $8 range. Once we got to the 12, we got overextended. We are above the value area low from the Thursday, which is that line here. I wanted to show the timestamp on it to tell you, hey, pay attention to my weekly videos. They do help you out in the long term to see the connections between one video to the next every week that I put out. So let's go right now and take a look at where the YouTube channel is. This is, I've been using it for a while. I hope everybody will subscribe. 85% of you to 80% of you do not subscribe. Hit the subscribe button. Give us your commentary. Let us know what you think. We're here to help. Let's go to the first slide that I have up here on the Thinkorswim platform. And I put the Russell 2000 RUT, the large contract, instead of the IWM. What I wanted to show you, there was a lot of consolidation from the Monday. We had a double top. Tuesday was down. We rallied up off the 18 simple moving average. Wednesday, we came back to almost to retest the 18, rallied back up. And on Friday, we sold off on a gap down and we continued lower. So the most important thing is understanding between this area here. You see that consolidation here on that breakout in January, February. We fell down to the March low and we rallied. We have this island reversal here. This is one. This is another island reversal where these gaps are. I will kind of put an oval there so everyone can see it, or a triangle. We'll use the oval this time. So this is a gap. That's a professional gap. There's one here. This was actually, you can see it, not 100% filled. A portion of it filled. Even coming back down between the 18 and the 50 SMA to the backside of this consolidation, if I do move it in, you can see where that gap is. If I edit the property and I extend it to the right, say, let's say I put it at 529, and you can see that this level may be possibility of coming back down between the 18 and the 50. There's a 32 32 32, or you can use a 34 moving average. It kind of gives you, hey, pay attention to the 5 and 18 in case they cross. It becomes a bearish cross like it did here when the 50 cross came down. The market does not have to continue lower, but there are signs in the market that's telling me, hey, pay attention to these instruments. Secondly, and I'm going to go over it, and the real truth is basically the bond market. You remember the Federal Reserve Board, the chairman, Jay Powell, is still on the board, but we have a new chairman. So pay attention to what they want to do in the interest rates. And what I want to do is show you MOVE. And you can see MOVE spiked up while the ZF, I'm going to show the 5-year notes. Hold on, let's see. You can see that spike up. And if I do ZF, this is the 5-year notes. I'm going to show you the difference between the 5, 10, and the 15. You can see that move sharply down. And if I do ZN to the 10-year note, ZN, that's the 10-year notes, you can see similar situation. But if I use the ZB, the 30-year note, this is going to give me a big tell in the overall market. And what I wanted to show this is the reason why. And if I go to TBT, which is the inverse relationship to the bond, you can see the spike up in interest rates. And we have to pay attention to that rates, what they're going to do, if they're going to pump more money into the market or not, to make the banks and everybody, get a little bit of slowdown. But if there's a spike in interest rates, it's going to cause a little bit reaction. We have as well the Middle East, the Iran ceasefire in the Gulf, Israel, you got the China, you got Samsung in Korea, the strike and all that stuff. So we have to pay attention to the chip sector. And I will show you XLK. I'm doing this a little bit differently than I usually do a regular video. You can see XLK from the March low and the breakout of this prior year high here that happened in 2025. You can see that high. We got the extension. I showed the 123, but I do not have the edit the property. I'm going to show you how to do this. You can see I have the 123. Let's put the 138. Okay, 1382. And I'm going to put the 150 there. Okay, everyone, 1.5, and I'm going to change this to a solid line because these are usually my setups. So you can see where the moves happen to the upside, where we got extended to the 138 on the annual chart, but I did not extend this to the upside, which we can move, the 138, the 161, and the 178 and put them up here to show you how far extensions we got to the upside. Edit the property. I'm going to show you this. You see the 300? We do have the 178. I'm going to move the 178, make it into 3.236, and you can see where it is. And and I'll take the 161 and I'll make it into 3.1462. So this one, I'm going to make it small. I'm going to change the color on this one to some kind of a green, and I'm going to make that 2 so everyone can see the levels. The reason why I wanted to put this in case of a pull back down, because the XLK showed there was a little bit change in the tech sector and the semiconductor SMH. So I wanted to show that 123, and I can take as well, the 150 and put it up here so everyone can see it. So we're going to do this one more time so everyone can say, hey, in case we break up to the upside, I want to show the 150. You can see the 150 here. What we can do is we can put a 3.5 up there and push OK and let it go. This is where we rejected when we came back on Friday. We looked up, opened, and fell in. So this is very important to me. So let's take a look at SMH in the semiconductor. SMH. And you can see in the semiconductor, we had sector rotations in the market. So if I take a look at the overall the NASDAQ 100 lost 1.5. Alphabet was neutral to positive. Amazon was down. Goog and Google were down a little bit between preferred and non-preferred, which is Alphabet. Facebook, which is Meta. Microsoft was up, because you remember they need data centers. You can look at HP, you can take a look at Dell, you can look at NVDA, we can take a look at avgo as well as WDC, because NVDA is a chip manufacturer. avgo is the company that gets us going in the MU, and you need the storage WDC where you can have those facilities. So you can take a look at Caterpillar, DE and stuff. We can see that there is a slowdown, and we have to pay attention to Samsung overseas and the strike in Korea. If this stops, then it's going to drag back down, draw down in there, because there's going to be supply and prices will come back down. So is there a filling up a portion of the gap? You can see this gap was filled, so we can remove it. Remove the drawing. I'm going to put this island reversal. You can see there's one here. There's a tiny one here. This one was filled. There's another island reversal here. I'm going to mark it in blue, and you can extend it to the right. That's coming back to the 18 SMA. Is it possible we can come back to the 18 SMA and this consolidate? Yes, but between the 18 and the 50, there's a 34 or a 32 moving average. You can see where that consolidation happened before the rally. But if there's a U-turn and continuation, that's fine. If the technicals tell us, hey, we're going to go higher. So if you take a look at the S&P 500, it lost 1.24%. Energy was up. Consumer discretionary was more or less flat to the line. Financials were a little bit down. Utilities and material were down. Consumer staples were a little bit down. You can take a look at the tech sector, real estate, industrial, healthcare were down, telecommunication. Bitcoin was down 2.8%. Ethereum was down 3.3%. Gold was down 2.3%, as well as the fear and greed gauge, which is the VIX. It gives us an opportunity to take a look at the VIX. I'm going to show you VIX. And I will go show you how to use the measured move. You can see that the VIX has started to get its rounded bottom. It spiked up to that triple top up here, fell back in, but tried to rally. Remember, in the morning, we had the gap down. We rallied up, and on Friday, they sold some of that sector in the S&P, and you can see the VIX tried to spike back up. I am paying attention to that $20 range in case we do spike up and we clear the 50 SMA between the 18 and the 50. There's a 32 here. Pay attention to it, or 34, in case we come up and we clear it and we run back up if there's change in the technicals. Let's go now to go in the style. I'm going to go to a basic chart, and I wanted to show you here on the basic chart, we're going to load the clean RSI. And you can see that there is a change in the trend. That downtrend is no longer there. We have an uptrend, but I'm paying attention if that uptrend spikes and the VIX cleared the 50 on the RSI. So let's take a look at now RUT. Like I showed you earlier, you can see where we had it. Now we can take a look at the NDX, the NASDAQ 100. And I'll show you the QQQ. I do have these fib extension. I am paying attention to that 161 and the 150 extensions to the upside. And I drew it backwards. I drew the 100 down here, the 0 here. So the measurements are going in the opposite direction. I can flip them and do them the other way, but since I did them that way, I left them on that way. I understand we are extended to 200%. Coming back to the 161, I'm paying attention to the 150 and the 138 in case we fall in that island reversal right here on NDX. Let's take a look at the SPX. Oops. This is the S&P 500. You can see that there is a decline, on that gap down. We tested the backside in the morning, tried to rally, couldn't make it. We went above the open, we cleared the value area, and we fell back down, and we sold off on Friday down to this area. If there's going to be continuation, I am paying attention to this candle in this one. In case we do lose it, we'll have the gap fill on the S&P 500. Let's take a look at now the micro ES, and we'll do the measurements on it, and we'll do some stuff so you can learn how to do the QQQ and SPY. Let's take a look at the micro ES, which is the S&P 500. These virgin control points, I usually put them up. These are in a volume profile, and I wanted to show that big candle going up. This is considered, an engulfing, but did not close the Wednesday's candle. I am paying attention to that low and the Tuesday low here in case we come back to this consolidation. Find some kind of support and bounce. If not, I'm looking for the 18 SMA in this area here. So let's take a look at it on a little longer time frame. This is the 30-day 6-hour chart, or you can use a 4-hour. I wanted to show the prior 2 weeks there was a lot of consolidation, then we got that push up, then now we're coming back down. That gap up, if I take the overnight off, I'm going to show you in the style, in the setting, if we do take that overnight gap off in the futures, you can see this. If I uncheck it, that gray area will be gone. It'll show you the island reversals where the gaps are. You can see this gap was filled. There's one up here, which is a larger one down here. I'm not saying we have to come all the way down. I'm paying attention to that professional gap up from that area, and at the same time we are holding the 18 SMA. If I end up losing this 358 area and we come down, I'm looking for this consolidation in this island down here. And if I zoom in from this area to this area, you can see where there is an island here. I'm going to put it up so everyone can see it, okay? And I'm going to put this one up here, this one filled. This is filled. I think this is filled. Let's take a look at it. The high on this one was 7,081 and the low on this one was 7,079. So this is filled, no longer valid. We only have this one. If I want to edit the property and I want to extend it to the right, I'm going to put a marker to 530 so everyone can see it. And this is where the gap is. But if I want to measure this area, so I'm going to go back in the style, I'm going to put in the styles, in the setting, we're going to go back to the futures and highlight the overnight. From the overnight, what we do here, we take the highs and lows for the week. We're going to go get the measuring stick. This is measurements. This time I'll draw from high to low. This is the Thursday. That was Friday, Wednesday, Tuesday. And this is the Monday. This is over the weekend. You can see where Sunday was. This is the Friday range. And if I do that, I'll have these extensions. This is the measurement move. This is not Fibonacci's. I would usually toss on Schwab has 0 to 100. I did extend it to plus 200, minus 100. And I'll change the color for the weekly measured move, usually in blue or cyan. And I'm going to extend it to the left. Sorry, I did not do that. Edit the property. You see here, it says 514. I'm going to go to 412. So everyone can see it and push OK. So it'll give me the extension. If I do zoom down, you can see where the minus 100 and the 80 is. Can we possibly come down here, or can we reverse and go back to the top? Yes, I can pay attention to the 80 to the 100. In case we come up here, we get rejection. And if I do fall, I'm paying attention to that 0 line in the 20. If there's support at the 50 SMA, if not, I look for the extension of the 50 to the 161, and that gap fell on the micro S&P. So we can do this at the SPY. You can see where the SPY is. It's in a similar situation. You can do the same measurement. You can grab this high to this. This is the Tuesday. Yep. This is the Friday low. I just want to show you the week before. So you can extend it to the right, edit the property. And what we do, we go back to 4. And I can do this to 401. So everyone can see that a little bit more. And we can change the color to blue. And push OK, and you can see where the extensions are, where those island reversals. If I do take that overnight action off, you'll see the gaps. We're going to do this together. We're going to go in the equity, in the setting where it says for futures. You see equities here because this is part of the ETF. If I uncheck it, it'll show me the gap. Okay, everyone? So this is very important to see where the level, you can see where that gap is. And you can see where the bottom gap is. So more importantly, I do use the gaps myself as a reference point, but usually I am looking at the overnight action from the Eurozone to the morning market when the US market opens up at 9:30 on the East Coast. Let's take a look at now these different sectors. And what I wanted to show you is a couple of different ways. If you look at Cisco system, because it's reported nicely, you can see Cisco system rallied, came back 50% of that move, of that leg here. If you measure it, if we take this high, was at the overnight, to this low here. You can see where that 50% was on that earning report. You came back, retested, and rallied back up. It's very important if Cisco is going to continue and go higher, or do we get a reset back in this territory where the 18 or between the 50 and the 18 to hold this position to continue higher. So this is something to look at and understand that, hey, there are some instruments that are doing well, while Microsoft, if you look at Microsoft, it's been in consolidation down and up, and you can see that reversal back up in Microsoft a little bit. You can see that in Palantir here, it's been, in a downtrend. It tried to rally, came back down, and it's in the grind to the bottom, but they tried to rally it up on Friday. If I took a look take a look at the storage or the tech sector or the cyber stuff, we can take a look at some different instrument and cibr. This is one of the big ones. You can see how sharply it's moving up because there's money rotating between these different companies, and you can see that move down. That's a double top here. Even if it comes back down here and fills that partial gap, there may be continuation, and I can see that the RSI is a little bit extended to the upside. If I take a look at the NVDA, you can see that spike up here and the sell-off on Friday. This is very important to pay attention to. This doesn't mean that, hey, the chip manufacturing is good. There may be a slowdown, but if there is, you're going to look for the opportunities coming back to these areas in order to purchase them. Let's take a look at avgo. avgo. We can see in avgo, you have a lot of consolidation and chop in this area. And we can see that this move up, down, move up, and we had an inside candle. This is very important on the weekly if there's going to be a change in trend or there's a little bit of exhaustion in avgo. You can take a look at the MU. And we can see MU after, that move up. If anybody that's, chasing a return and you get a 10, 12% drop from that island reversal gap, you can see how sharply it moved down. On the weekly, if I show the weekly, it's going to look a little different, but you can see that move up and come back in. So you have to pay attention to these daily charts and understand the risk involved. So we're going to go daily. We're going to go 9 month. We don't have to go that far. We're going to go back to daily. And you can see that there are some kind of consolidation after the move up. I consider this like a double top. You got an island reversal here. This is just a, almost like a hanging because of this candle here on that gap down. Is it going to come back up, or are we going to come back to this area where that consolidation happened in this gap here on that island? You can see there's one here. If I put it in, we can do this so you can kind of, now let's get the oval ones. Oval, because the color is a little bit more brighter, you can see it. And if I do this, you can see where they are. And if I do this one, you can see where that is. So these are the things you have to pay attention to in MU. Let's take a look at the storage as well. WDC, even if they are developing the storage units and stuff, there's always people that will take those storage eventually in overtime if there is a slowdown in that sector. And you can see, from the Monday high, Tuesday, Wednesday, Thursday, Friday, we are selling off and around the top. Does it create a shoulder to continue lower, or do we end up losing the 18 and coming back to this island reversal where that oval is, and you have another one down here? These gaps do not have to fill, but they are there on the charts. Pay attention to them in order to help you out. Let's go last but not least. We'll do the NASDAQ 100. We're going to do the micro NQ. And I wanted to show the micro NQ here. Like you can see that sharp move up. I do have a lot of lines on it. This is my monthly expected measured move on the charts, and I'll show you the monkey bars how it would look like. The most important thing is you understand when we broke out of that area here, we rallied up, we cleared those two tops and never came back, and we continued higher. This is a sharp incline. If we are in a sharp incline, and this is my monthly measured move, we came back to the 150, missed the 161 on the monthly, we fell back down to the 138 on the monthly. If this is going to hold, you have to pay attention to that channel. If not, look for the 18 SMA in these candle, because this was where the major consolidation and the breakout of the retest in this area, and that would be the monthly market profile value area high, and I will show you how to look at it. So let's go back here. We're going to go into style. You can see here standard. We can go to monkey bars. It's going to give you the daily. And on the daily, you can see here how I set it up. It's a 3-month daily chart. That means each month I'm going to have where my value, where my high is, where my low is. My value area high and low is the shadow. That shadow up here is value high that's developing. My value low is here. And my point of control is where most volume and contracts were bought and sold, or shares on an instrument. This is a monthly monkey bar or volume profile. What's the time spent? So if I zoom in here, I know where my value high is from that month. For the May month, we rallied up. We continued higher, correct? So very important to pay attention to the value high and the point of control in case I come back to that area. On the monthly, the point of control is royal blue, and red is the value high, and the value area low is in green. I do not mark the monthly monkey bars until the month is over, and I will usually migrate. Like this point of control is never touched. It's a virgin control point, which means the point of control where most volume happened has never been touched, but in the future it can be. In case we do fall and retest it, that's no longer valid. Usually we're going to go back to the new month and move those value high, value low, and the point of control on the charts. So if I look at it on a 10-day, 30-minute, you can see here I marked this area. We were in consolidation. We rallied up and came back down. So if I'm going to mark the value area high from yesterday, this is the value high. This is my value area low. Okay, everyone. This was my point of control, which was a virgin control point from the prior days. You can see it. Now, if I move it up here, this was never retested. You can see it. If it was tested, then it has been tested. You can see it on the top. Then I move it down to here. So this VPOC started from here. So I want to show it to where it is. You zoom in and you mark these areas to know where your value high is. You can see it here. This is on value area high, value area low. I'm marking this and going through them a little bit more so that way people can learn them and understand the reasons behind this madness, because it will help you in your trading and you become more efficient. Usually in trading, we either trade above value, and if the market is bullish, we sometimes come back, retest it, and bounce off it, or there's continuation. That means it's super bullish. If I come back inside the range and I fall in and I close inside the range, I'm looking for the point of control. And if I bounce off it, I take some profits. If not, I look for the value area low. And if I'm trading inside the range, it's called chop. That's range bound. Basically, you're trading inside that prior day's range, so there's no decision have been made to which side the market, because they find value in that area, and that's the developing value. If I'm trading to the bottom end of the chart and I'm trading on a bearish sentiment, I'm going to continue trading lower in case I do not test the value area low. But if I come to test the value area low and I cannot hold it and go inside and I fall down, that's shortable. And the technicals and the breadth of the market will give you that. So if you can see on Friday, we tried to rally, because on a gap down, we fell back down and we continued on Friday afternoon to sell off. And this is where the close was. So let's go to the style. go back from the monkey bars to standard, and I'm going to do this on the out. You can see the daily candle down, but what I'm going to do is show it on an hourly 20-day, and I'm going to just zoom in here on those last 5 days. You can see the prior week range. This was the prior week range. You can see I anchored these Fibonacci, so we're going to edit the property, remove them. Okay, we're going to do this again. So we can see where the high weekly was and the weekly low is. So I'm going to go measure it. That's the measuring tool. I'm going to go from this high to this low for the weekly. And I know that's my weekly. I'm going to edit the property. I'm going to extend it to 4-1. Oops. Correct. We're going to change the color to blue. And this will give me the extensions. I am on a weekly measured move for this week. My high and low, I know where they are. I'm below the 50%. And I'm touching where I'm looking at the value low, the point of control, and value area high. And you can see my Fibonacci from 0 to 100, the machine grabbed this. If I'm going to look at the weekly, it's going to grab this to this if I put 10 days on a 2-hour or 4-hour chart. But if I'm looking further down, I know where my extensions are, and I can see that my RSI, when it created this high here, I fell down, rallied back up. I created a head and shoulder, but this high here, I had an RSI lower. So there was divergence there. We fell down, tried to rally, created a lower high in the RSI and fell further down. So this is very important to understand when I'm trading. I'm looking for extreme moves to the bottom for reversal and extreme moves on the RSI at the highs. So this is how you're going to learn how to trade technicals, and I hope this video was very helpful. And if you have any questions, we're here to help you. Once again, you can check us out at Solstice and get in contact with us. And if you want to DM me or message me as well, you can reach out to me on X. So take care, over and out.